Ever wondered about a bank Nifty options buying strategy that works most of the time? Imagine having a playbook that gives you a winning edge in the trading game. Intrigued? Stay tuned to discover a strategy with a high success rate. Before diving into the strategy, let's understand what bank Nifty options are. In essence, an option is a contract giving the buyer the right, but not the obligation, to buy or sell an underlying asset at a specific price on or before a certain date. In our case, the underlying asset is the Bank Nifty Index, which is a benchmark index representing the performance of the banking sector in the National Stock Exchange of India. The strike price is the predetermined price at which the buyer can buy or sell the Bank Nifty Index. The premium is the price the buyer pays the seller to acquire this right, and the expiry date is the date when this right ceases to exist. Traders use Bank Nifty options for various reasons. They provide a leverage mechanism, allowing traders to control large amounts of the index for a fraction of the cost. They also serve as a tool for hedging and risk management. Now that we have a basic understanding of Bank Nifty options, we can delve into the strategy. This strategy is based on three key principles. Firstly, let's talk about market trends. Understanding the direction of the market is critical. The market is like a river. It's easier to swim with the current rather than against it. If the market is bullish, we'll focus on call options. If it's bearish, put options become our best bet. Secondly, timing. Timing is everything when it comes to options. You need to know when to enter and when to exit a trade. This requires a deep understanding of technical indicators like moving averages, relative strength index, and Bollinger Bands, to name a few. These indicators can give you a sense of when the market might change direction, helping you make informed decisions. Lastly, we cannot ignore risk management. Options trading can be risky, and it's essential to limit your exposure. One way to do this is by setting a stop-loss order. This means deciding in advance how much you're willing to lose on a trade and sticking to that limit. It's equally crucial to diversify your investments to spread the risk. By adhering to these principles, you can increase your chances of success. Remember, the goal is not to win every single trade, but to come out ahead over the long run. And these principles are your roadmap to a profitable journey in the world of Bank Nifty options. Now, let's break down the strategy in 2 steps. Step 1. Knowing when to buy options. Timing is crucial in options trading. You want to buy options when the Bank Nifty Index is in a clear uptrend or downtrend. This means watching for higher highs and higher lows for an uptrend, and lower highs and lower lows for a downtrend. Step 2. Choosing the right strike price. This is the price at which you can buy or sell the underlying asset. For this strategy, you want to choose an at-the-money option. This means the strike price is close to the current market price of the underlying asset. Step 3. Knowing when to sell. The ideal time to sell is when the option has reached a significant profit target, say 50 to 60%. However, it's also important to sell if the trade moves against you. If the Bank Nifty Index breaks the trend you were banking on, it's time to cut your losses and exit. Step 4. Managing risk. This is a crucial aspect of any trading strategy. One way to manage risk is by setting a stop loss. This is an order that automatically sells your option if the price reaches a certain level. In this case, a stop loss of 10 to 15% below your entry price is a good rule of thumb. Now, let's talk about position sizing. This is the amount of money you put into each trade. A common method is to risk no more than 1 to 2% of your trading capital on any single trade. This means if you have a trading capital of $50,000, you would risk no more than $500 to $1,000 on a single trade. Finally, always remember to monitor your trades. This strategy isn't a set it and forget it kind of thing. You need to keep an eye on the market and adjust your positions as necessary. By following these steps, you can implement this strategy in your trading. Let's recap the key points of this strategy. Firstly, remember the three principles that underpin this strategy: understanding, analysis, and patience. Understanding the market is crucial. You must be aware of the dynamics and trends in the bank Nifty options market. Without this knowledge, you're navigating blind. Secondly, analysis. This strategy necessitates a thorough examination of the bank Nifty options market. Remember to consistently review the historical patterns and keep an eye on the market volatility. This will help you make informed decisions and minimize the risk of losses. The third principle is patience. This strategy isn't about quick wins. It's about playing the long game and waiting for the right opportunities. Don't rush. Wait for the market conditions to align with your strategy. Patience, after all, is a virtue, especially in the world of trading. Now, let's revisit the steps of this strategy. It begins with selecting the right bank Nifty options based on your understanding and analysis. You then set up a buying strategy, considering the market dynamics and your risk appetite. Remember, the key is to buy low and sell high. Finally, monitor your options regularly. This isn't a set it and forget it kind of strategy. You need to stay updated on market trends and adjust your strategy as needed. Remember these key points, and you'll be well on your way to successful bank Nifty options trading. That wraps up our discussion on a bank Nifty options buying strategy that works most of the time. We've delved into the basics, outlined the strategy, walked you through the steps, and highlighted key points to remember. It's a strategy that requires understanding, patience, and a keen eye on the market trends. Remember, the essence of this strategy lies in buying options when the market hints at a strong move. Timing is crucial, so stay alert. Keep in mind, though, that while this strategy has proven effective, there's no such thing as a one-size-fits-all in trading. Tailor it to your needs, your risk tolerance, and your trading style. So, go ahead. Give it a shot. Unleash your trading potential. Thank you for watching. Don't forget to like, share, and subscribe for more trading strategies.